AI is going to replace us as tax preparers. We fell for the tax return lie, the tax return trap, because it was easy recurring revenue. They want a $400 tax return, they can go and they can find a $400 tax return. I'm going to prepare tax returns for $40,000. You are going to exit your business someday. Do you want to do it on your terms, or do you want to do it on whatever terms are forced on you? We want all of our clients to come in with one vision for what they are going to get from our firm. We won't have a company legacy to pass on to another generation unless we continue to innovate what that company does and what it brings to the market. You are paying us on a monthly subscription for our empathy, our empowerment, our accountability, and our foresight. Start asking, am I on the right bus?
Welcome to the Art of Succession podcast with Barrett Young. Join us as we explore the strategies, stories, and insights that shape the journey of leadership transitions and business success. No matter where you find yourself along the journey, this is the podcast where you'll find the tools to make it happen.
My name is Barrett Young, and this is the Art of Succession podcast. It's time for our first quarterly update. So at the start of season 3, I talked about how one of the changes that I wanted to make to the podcast this season was to provide an update on a quarterly basis, so twice every season, of where we at GWCPA are at in our own succession journey. So we are an 80-year-old CPA firm. My partner Sam and I are the current partners in the company. She is 6 years away from retirement herself, and then I will take over as managing partner of the firm. We're currently in the process of retiring fully another partner who preceded Sam and myself, and we're in the process of identifying my successors, the partners that will follow along behind me. Our goal as a company is to have 2 of those partners in the pipeline when Sam retires within 6 years. And we are currently working towards that as well. So that's the big picture of where we are at. We are a multi-generational business. We have been around for a long time. We've worked with a lot of clients that have been around for many decades, into the 2nd, 3rd, 4th generation, even for some of these clients. And that's who we work with. The Art of Succession is not just a target market for us, it is us. And so I wanted to get behind the scenes in these episodes each quarter and share some of the own nuts and bolts of our company every 3 months of where we are at and how we're making progress towards the future. I'm going to get into entrepreneurial operating system now. That's probably the biggest change that we've made in this quarter. Probably going to be one of the biggest impacts we've had on the company, at least in the past 2 years since we rebranded and focused our company, but probably as a building block for the future moving forward, probably going to be one of the biggest changes we've made. But what that's helped also is to bring focus to who we are and who our target client is. So for the past 2 years, we've said that we work on multi-generational businesses. We help with the transition. We help with bridging that gap between the predecessor generation and the successor generation. There's a lot of tax implications there. There's a lot of systems that need to be in place in order for that to proceed smoothly and make sure that the company is able to operate after that entrepreneurial founder generation retires and steps back from their company. But we also know that that's a once in a lifetime transaction for most businesses, or a once in a generation transaction, obviously, for a lot of businesses. And it doesn't really capture who we are, who we work with, and how we want to work with our clients. We do not want to work with clients in just the 2 years leading up to that transaction. We're not M&A advisors. We're not business brokers. And really, if we're only brought in those last couple months to do the financial transaction, the tax return for that transition, you're really missing out on the power of what we can offer to our clients. And so as we are working through EOS, we've identified our leadership team. We're working through, what does our brand say? Why are we here? One of the clarity moments that came to us in our last meeting with our implementer, which is Vision Day number 1, one of the things that came to us is that we're not just here for the transition from one generation to another, because a lot of businesses can transfer hands. Who our target market is the companies that realize that there is not going to be a legacy there for the next generation unless they continue to innovate the company. So we're also not just here for the innovative companies. We're here for the innovative legacy companies, or as we have put it on our website and as we're starting to define that, innovation to build longevity. That's who we really want to work with. On the one side, you've got innovative companies. You've got startups. You've got Silicon Valley funded angel investors. You've got really innovative companies doing really interesting things that want to cash out and sell the company, go series funded, and cash out of the company within 5 to 7 years. That's the innovation side. On the longevity side, a company that has longevity that doesn't have innovation is just, I've built a good living here in this company. All you need to do as the successor is step into this role and continue to run this company the same way I always have, and continue to receive benefit from it, continue to receive the cash flow from it, and do the same thing that I've always done for 20, 30 years, and don't rock the boat too much. Don't destroy the engine that produces the income within this business. We don't really want to work with either company in isolation. So what we identified in our vision day one is that we really want to work with companies that realize that innovation has to be married to longevity. We won't have a company legacy to pass on to another generation unless we continue to innovate what that company does and what it brings to the market. Because what a company needed 15 years ago is not what a company needs today. What a company needs today is not going to be what a company needs 5, 10 years from now. We think that this really does provide interest to the incoming generation, that successor generation, because I'm not just saying step into this and coast. I'm saying step into this, put your innovative entrepreneurial hat on, and how using the foundation of what we've built in this company, the legacy of this company, what needs to stay and what do we need to change? What do we need to adapt for the next generation of clients that are going to rely on this business, of staff that are going to work within this business? And so this has been really helpful for me as the marketing partner, because it means that I can talk about innovation. On our YouTube channel, on our blog posts, you're going to start to see a lot more posts about innovation, about changing the systems within your company, not just setting it up and forgetting it. And it also helps to clarify, we want to work with businesses in the 10 years leading up to that transition. If you are a client who comes to us and says, look, succession is not on my radar. I'm 35 years old. I just got this company started. Really, my kids are little. It would probably be 20, 25 years before I even think about bringing them into the business to operate anything. Are you the right fit for me? We can be. We can be if you are interested in innovating your business model. We can be if you are interested in realizing that what you offer today to the marketplace has to adapt to a world with AI, to a world with geopolitical concerns, to a world where attracting staff is going to continue to be a challenge for businesses. So we can work with you. It also gives us context for, we want to continue to be involved in that business after the transition. And so that was always my concern. As marketing partner, I was always like, is our target market the buyer or the seller? On the buyer side, you have people who are doing like the entrepreneurial through acquisition game out there, like the Cody Sanchez's of the world, or the acquisitions.com. These are MBAs who are like, I just want to own a business. I don't really care what the business is in. I'm just looking for a turnkey business that I can step into and generate cash and work, buy one of these boring businesses. That's on the buyer side. I don't speak to that. I want to speak to buyers who are like, I love this profession. I've been doing it for 15 years. I really want to step up into the ownership of this business. I have to convince my boss, my parent, to trust me in this business, that I am the person to continue the legacy that we have here, continue the services that we provide to the small business market. The flip side of that is, as I'm doing marketing, I'm like, do I work with the seller? Do I work with the established business owner who's probably already got a team of advisors, who's possibly not looking on YouTube, not listening to podcasts in order to identify their next advisor or get advice on exit? They very well could be. I mean, YouTube is huge among the 50, 60-year-old generation. But is that my target market? Is it the buyer? And if that's the case, then how do I make a case for continuing to use us as your CPA firm after the transaction happens? And so this innovation to build longevity really relieves a lot of tension in my mind, brings some clarity for me, and then it also brings clarity for my team. We found in That vision day one, we spent the afternoon talking about marketing and things that are swirling around in my head. We talk about EOS. I am the visionary. My partner, Sam, she's definitely an integrator. I live and breathe what does the future of our company look like 10, 15 years from now. That's always at the forefront of my mind. And so where I had been living and breathing our marketing, our target avatar for the past 2 years, I had not been doing a good job of communicating that to our team. And that really came out in that vision day. Huge just shift in the conversation, huge shift in our company just in the first 2 meetings that we've had with our EOS implementer. So I'm going to focus on that real quickly. Just what is EOS and why now? So Sam and I have known about EOS. EOS is Juno Wickman. He wrote these books. Traction is his primary operating system to run a business. And then he also wrote another book called Rocket Fuel, which really gives you that visionary integrator. Blend those two things together, and it's like fuel and oxygen to make the ship just take off. He wrote these 2 books about 10, 15 years ago. We had both read them previous to us working together. We had read them and really taken root with some of the ideas, and we tried to implement a couple things along the way since I joined here 8 years ago. But we went away to Exit Planning Summit in Florida back in May, and we heard a lot of things about CEPA, Certified Exit Planning Advisor, which is a designation that the Exit Planning Summit has really built its model around. And we heard a lot of things about how well the EOS and CEPA work together. We came back from that and we said, right now is a very transitional phase for us as we've consolidated our firm under Sam as the financial statement and accounting partner, under myself as the tax partner. We are consolidating marketing under one person. I am the marketing partner, and so we don't have CPAs out there building their own book of business anymore. We want all of our clients to come in with one vision for what they are going to get from our firm. So this is very pivotal. It's also a lot of work that falls on both myself and more on Sam just as the integrator. And so we really needed to get the entire team rowing in the same direction on this boat. All heading in the same direction. EOS talks about right seat, right person, right seat. And it really is, are you on the right bus? So, Sam and I have had some fights over the past couple months as we are working through things, as we are trying to stop miscommunication, stop just lack of clarity or assumptions or identifying who the right role is and how they're accountable for that and how they're held accountable for that. Sometimes mostly on my part, by her being the integrator, by me being the visionary, needing deadlines, but then also kicking against deadlines. So we've had some fights, and Sam's retirement is 6 years away, but it is going to be here quick. 6 years is a short time. It's been 5 years since COVID, and some days that seems like just yesterday. So her retirement is coming soon. And we don't want to wait until the last minute. That's our message to our clients. Don't wait until the last 6 months or the last year before retirement to start planning for this thing, to start communicating this thing. What I don't want, and what the risk having a strong integrator in the managing partner role of our company, the risk is that Sam would be still involved in so many things within the business that when she steps away, key man risk, it's one of the biggest destroyers of value within a company. She steps away from the company. Who's going to be there to pick up all of these pieces? Who's going to be there to continue to work on all the deadlines, all of the processes that we have in place? And one of the things that I wanted, EOS bringing in an implementer outside of us, so that it's not Sam that has to read the book and figure it out. It's not me who has to read the book, get excited about it, and try to explain it to everybody else. We brought in an outside implementer so that she could put us on the right track. She could tell us where we are off track. She could tell us where we need to face up and face reality on some things. And she could empower our leadership team to also speak truth to us and be open and honest with us, because we have brought them into this position in leadership. And so we came back from Exit Planning Summit. It took about a month or two for us to have some fights and really say, we have to prioritize this. And so we did. We had our first meeting in July. We had our second meeting a couple weeks later, that Vision Day 1. We have got our third meeting here at the end of September. And then we've also invited her to our annual planning retreat in May when we go to Rehoboth Beach, Delaware. So she has brought a lot of clarity to us in the company already. One of the things, saying we are heading in this direction and we want a leadership team to be on board with that does confront people to start asking, am I on the right bus? One of the unfortunate side effects of this, but necessary side effects of this, is that we've had a team member who's decided that she doesn't want to be on this bus anymore. 25 plus years of experience in public accounting, and she has decided that it would be best if she leave public accounting, and she's gone and taken a position with one of our larger clients as their accounting department, as their controller. We wish her the best in this. We know that it's going to be a great fit for the client, and it's going to be a great fit for her, because we would rather have a team member get put in a position where they're going to be happy somewhere else if they're not able to be happy here. So very difficult transition. We're still in the process of doing that as this episode airs, but that's the clarity that we've gained through EOS. One of the cool things that's also come from it is we have another team member who we're in talks with right now. Hopefully by the time this airs, she will have agreed to come back in, but she worked with us about 6 or 7 years ago. She left to go to government. She left public accounting because of the culture that we had at the firm, the traditional model that we had at the time. She had worked with us for about 5 or 6 years up to that point and left and went to government. She has since come back. She was actually brought back into the company by this accounting manager who's leaving the company. She was brought back in. She's seen how we've changed. She's seen what Sam and I have done for the future of this company, and it's become the company that she always wanted to work for. And so we are in talks of bringing her back in to join the company as a manager. And so that's been really encouraging, just to have somebody come back. I left public accounting. I was out for about 5.5 years. I left because of timesheets, and I left because of just the cyclical nature of tax season. I left because clients, I would only see them once a year, do a quick tax return, and it would be like, bye, peace out, I'll see you next February. Hopefully you call me or you email me before you make any big decisions, but more than likely I'm going to find out about it about 1.5 years after you've already executed on that decision. And so I got really burned out on these kind of transactional relationships, handling 200 something transactional relationships on an annual basis for businesses, where I'm like, you really would benefit from having a CPA in your corner year round, talking with you regularly, growing your company, doing more than just the tax preparation. So that's one of the reasons I left public accounting. I didn't leave GW. I didn't work at GW prior to that, but I worked at 2 other firms. And I saw what public accounting was like. So I left for 5.5 years. Sam actually left public accounting at one point. She was here at GW. She left and went to government accounting for about 1.5 years, 2 years, and ended up coming back as well. So we totally understand sometimes staff need to go and see the grass on the other side looks greener, but it's usually covered in manure. I love that saying because it has been so true in my own life. Every time I'm like, I'm dissatisfied, it's because of this. And then I change that and I go try something else. It's like 6 months later, I'm like, I'm dissatisfied again. It's got to be this. And it's like, no, the common thread in all of those things was you, Barrett. And it was that realization for me at about 28, 29 years old, about the time I became a CPA and then started my own company. It's like, no, you've chosen to be dissatisfied everywhere you go because you are letting your situation determine your satisfaction. You're letting your situation determine the ambition that you apply to the work that you do. And I got off on a rabbit trail on this one, but I want to say, that's the realization that really matured me in my career and caused me to make long-term decisions and not just, I hate Monday mornings, and so obviously I need to change jobs. I don't know where that came from, but that was just my personal rant on passion, loving what you do. I read a book about the same time, probably a little bit after I'd already made some of those decisions. Cal Newport's book, So Good They Can't Ignore You. I absolutely recommend this book to anybody who is stuck in a career, stuck in, I don't feel like I'm passionate about what I do on a daily basis. Cal Newport's book is that skills trump passion in the pursuit of work that you love. He is absolutely not against loving the work that you do. I think everybody is going to appreciate their career a lot more when they're doing work that they love, but chasing passion as the world understands passion, of this like almost romantic feeling of, oh, I wake up every single day and I can't wait to get to work, and I absolutely am in love with what I do every single day. That's not real passion. I mean, the root word of passion, the passion of the Christ, the root word, the Latin word for passion is blood. It's like, what are you so passionate about doing that you would continue to do it even when you suffer? That is what passion actually is. It's not that there's not going to be ever any Mondays where you're like, I don't want to go to work. I'm obviously not passionate about what I do. No, it's what do you care so much about that even when it stops being fun, even when you go through periods, 6 months, a year, 2 years, where it is a grind, it is a struggle, you're still so passionate about it that you continue to show up and you continue to do that work. So Cal Newport's book, So Good They Can't Ignore You, really flips that on its head and says, instead of chasing work that you're passionate about, you should chase work that you are good at, where you're going to be able to gain some autonomy. Going back to Dan Pink's like cornerstone book for my career, Drive, Autonomy, Mastery, and Purpose. This is what gives you freedom in your career. So skills lead to the ability to say who you work with and who you don't work with. That's in Cal Newport's book. And people who are skilled are able to set their own schedule. They're able to determine what kind of work they're going to do. And he says that kind of work, with being able to say yes to certain things and say no to other things, that is where passion actually comes from in the long term. So that is a long rant. That's not part of this quarterly update for the company. But again, this is how my visionary brain works, for one thing. But this is why EOS is so important to us, is because I want to engage our team in that direction, saying this is who we are here for. This is why the work that we do matters. When you're just doing a tax return and then you finish it and you move on to the next tax return and you do 50 or 60 of those, and then it's like, all right, that season's over, get ready for next season. That can start to drain you. And I think that that's why public accounting just kills people in our profession so much, because you never step back and you never see what that tax return actually enables. That's who we want to focus on at GW, is we want to work with clients who don't just see us as a tax processor, but see us as an instrumental part of the success of their business, because we are changing their systems. We are helping them innovate so that they have a company that's going to survive into the next generation. And when we, as financial advisors, get married up to entrepreneurial business owners who've got this spark, this thing that they want to change in the economy, some good that they want to do within their community, we are able to, again, like rocket fuel, we are able to marry that up and make sure that the community is better because of that. I didn't go to school so that I could fill out all the lines correctly on a 1065 and process it for as cheap as possible so that the IRS would stay off my business owners' backs. That's an important part of what we do, but that's not why I went to school. I went to school because I wanted to understand what business is. I wanted to understand how that information actually benefits business owners. And then we built this barrier between what we know and what our business owners think that they're paying us. And so they want to comply as cheap as possible with the requirements, with the filing deadlines. And we put this barrier there called the billable hour. And so they're afraid to ask us any more complicated questions than that, because they don't want to pay more than necessary for the tax return. So for the future of GW, we have got to get away from tax returns. This is also what just drives my brain on a regular basis as the visionary of the company. As I know 6 years from now, when Sam steps away from this company, AI is going to be doing the tax returns. I think it's going to be sooner than that. But if I am counting on us continuing to fill out tax returns and process them and send them to people who just need tax returns, and then they walk away and we see them again next year, that business is going to be gone 6 years from now. I am going to buy a business that the engine has been stripped out by technology. Unless we are on the cutting edge of AI implementation for tax preparation, unless we are the ones who are driving that change, leaning into it, and then saying, okay, awesome, tax return done. AI prepared the tax return, reviewed by a human. We are done. Let's move forward. Now that that has been taken off of our plates, what can we do with the time that we've built into this agreement, with the recurring meetings that we've built into this agreement, so that you can actually get the advice that you care about, that helps you run your business? You know, so many business owners are just wandering around out there, Googling and trying to find as many free tips as they can when they've got a CPA that they have on, their top 5 speed dial or whatever. Nobody uses a phone anymore. Some of my clients do, but I'm trying to get them away from it. But they've got somebody in their Rolodex. They've got somebody in their Outlook address book who would love to have these conversations with them. But we're so busy because I've got to move on and process another 80 of these tax returns this month so that I can't answer your question. By building into that relationship, by becoming that trusted advisor that all of us got into this profession to become. We did not get into this profession to fill out tax returns. We fell for the tax return lie, the tax return trap, because it was easy recurring revenue. It was something that the government required, and our clients looked to us to do it. But that's not why we got into this business. That's not why most of us got into this business. It is a byproduct. It is a necessary evil of running a business, but we really want to talk about how to grow your business. And most people don't look at their CPAs that way. They might look at a coach, they might look at a consultant that way, but you've got somebody who's not only got a degree, but got a rigorous exam, got other certifications, has annual training in the principles of running a business. And all you do is you look at them and you see tax return. So where are we going in the future? AI is going to replace us as tax preparers. AI is going to replace us even as tax advice givers. Tax planning is going to be done by AI. Bookkeeping, obviously, is going to be done by AI. Where we are going to be in the future, this is what I love about my realization came about 2 months ago from this. We 2 years ago defined our core values in GWCPA. Our core values are empathy, accountability, empowerment, and foresight. These are the human traits that we bring to our clients. These are the things that we say are important. You don't have to have the exact same core values, but you have to respect our core values, and you have to not violate our core values in order to be a client here. And you have to hold us accountable if we are not living up to our core values. So we built this in. It's not just a statement for us. It's not just something we have on the wall, although it is on our wall when you walk into our office. It is something that we say, this is who we are as a company, and this is what the work we bring to the work. I was having this realization as I'm thinking about what are people going to pay for in the future? They're not going to pay for a tax return. That's going to be done by AI. I can fight against that, and I could work only with the clients that want humans to do it, but that's going to be a losing game. Those clients are eventually going to die off, and 40, 50 years from now, nobody's going to think that anymore. Just the same way most people don't still walk into a bank. There are some holdouts that walk into a bank and get their cash across the counter, but most of us have adapted and become ATM users. There was a huge fear. I was reading this in an article about a week or two ago. There was a huge fear when ATMs came in. It's like, it destroys the banking relationship. Do you know what profession has actually thrived in a different sense in the 20 years since ATMs have become commonplace? Personal bankers. So they're no longer passing you money across a counter, counting out the bills and handing it to you. They're handling your financial questions that you have when you do go into a bank. Now, I don't go into a bank. I bank online, but there are people like my in-laws who go into banks and get cash out, talk to personal bankers. They want to have somebody locally that they have a relationship with. So that position has shifted, but it's also thrived. Those personal bankers are no longer bank tellers just handing money across the counter. They are now getting more involved in their clients' lives. They are building better and deeper relationships. There's a lot fewer of them, but the ones that are continuing in that profession, the ones who are moving into that profession, are having a better quality of life. I think that that's going to be what the future of CPA profession is. When AI does the tax return, there's going to be fewer of us. Which is great because there are a lot of us retiring in the next 10 years. As the baby boomers leave the profession, they're not being replaced by and large. So there are going to be fewer CPAs. But as I'm thinking this through, what are people going to be paying us for? They're going to be paying us for empathy, accountability, empowerment, and foresight specific to GWCPA. You can get a tax return prepared by AI anywhere, but if you want us to go over your finances, help you make business decisions with empathy, accountability, empowerment, and foresight, that's going to be the brand, that's going to be the flavor of why you come to GWCPA, why you work with us. We are going to have to figure out a way to price our core values and say, you are paying us on a monthly subscription, not for the number of hours that we do, not for the product that we produce. You are paying us on a monthly subscription for our empathy, our empowerment, our accountability, and our foresight. Still working through what that looks like. And I get not every business owner is going to want that. There are going to be business owners that are like, I don't need empathy with my tax return. Just give it to me as quick as possible and as cheap as possible. That's fine. There's going to be preparers out there who will lean into AI and process, 40,000 tax returns in a year because they've got the bots that are preparing it and all they have to do is glance over it and review it. That's fine. Business owners can value what business owners want to value. But the ones that are like, AI told me I need to fire this person, but I am really struggling with this decision. Or AI told me in order to survive, my business model needs to shift and I need to move in this direction for income. And I am having a really hard time wrapping my head around how to do this or if it's the right decision. Those are the kind of conversations we're going to be having with business owners. That is empathy, accountability, empowerment, and foresight. That's it for now. I'm done ranting on this. I obviously can do a lot longer than this, but this is supposed to be a quarterly update. And that is like 5 to 50 year vision, Barrett, that you've gotten talking right now. So what are some of the actual things we've done here in the third quarter, 2025, to move in this direction? So just a couple highlights. Like I said, one team member leaving, another possible team member coming in. We are looking for a tax partner who's going to come in and replace that role for me so that I can do marketing, so that I can do that visionary role full time. We are working to bring in a financial statement partner so that my partner, Sam, can step back from that and run the company as managing partner, more like CEO role within the company for her last 5 years here as we define that role for her and for her successor. Were some of the big shifts that we've seen in this quarter. So I finished my certified valuation analyst. That's something that I've been working on for 2 years. It is knowledge that we are able to provide to our clients in the realm of what your business is worth. Really, I don't want to get into doing the valuations necessarily. We will do some valuations, but similar to audits, you need to do a lot of them on a very frequent basis in order to be efficient. And with me being the only CVA within the company, that's another role, another project that falls on me. And it's not something that we currently have other staff trained in. So that wasn't the goal. The real goal is talking to our business owner clients and saying, look, your business is only worth $2 million right now. And if you were to retire, sell the business, retire, walk away from it right now, after taxes, that's probably $900,000 when all is said and done. So that's obviously not enough for you to feel like you've walked away from your life's work and been paid for the value of the business. However, we still have 3 to 5 years before you have to make this decision. We can postpone this 3 to 5 years and maybe we can get the multiple up to $4 million. Maybe if we make the right decisions, bring in people, we can get that multiple to $3 million, but with somebody in this company who's going to continue to run it and benefit the community. There might be a discount there just for the right buyer in that situation. Maybe we get the multiple up to $7 million, but the person who's coming in to buy it is going to know rock solid there's an engine here that generates the revenue necessary to be worth $7 million. And so they say hell yes to that decision to buy that company for that $7 million. That's what I love about business valuation. That's what I love about identifying where the value of a business comes from, is when it's actually based on something, it is based on that owner walking away from the business. And so if you walk away from the business and the business collapses, that's because there's nothing there to generate revenue after you leave. But if you've built a business that is worth $7 million after you walk away from it, that means that it's going to produce income for anybody that buys that business. They can step into that role and they're going to have an engine that is running, a team that is solid, processes that continue to move on a regular basis. And so now they can step into that engine and they can continue moving in a direction. They can continue to innovate that company and really make some interesting moves. They are not stepping into it because they have to. They're not stepping into it because they're feeling guilted into it. They're stepping into that business that was worth $2 million 3 years ago is now worth $7 million because they know it's going to generate the revenue that is going to be able to pay for that $7 million. So that's certified valuation analyst. That's really my driver for the discussions that are going to come from this, talking to business owners about where their business value comes from and how we can increase that by focusing on the right things for the life of that business, the future of that business. We went to Exit Planning Summit back in May. Like I said, that's the CEPA designation, Exit Planning Institute. They are the owners of the copyright, the certification, Certified Exit Planning Advisor. Sam and I absolutely loved that designation through that conference because it was all focused on increasing the value of a company. It says exit planning, but it's really about building a company that you don't want to exit from, building a company where any day you can decide, no, I'm going to stay here and I'm going to continue to operate this business because the value of this business continues to increase. The value that it brings to the community continues to grow. So CEPA is next on my radar. To finish that, it's got an amazing curriculum that we can run our business owners through with the decision gate. And I can't remember the second gate right now, but it is really about bringing business owners to the reality. You're going to exit your business someday. Do you want to do it on your terms or do you want to do it on whatever terms are forced on you by the urgency of your need to exit? So CEPA, by the end of the year, we plan on anybody who is a manager or above within the business. We really want them to go for this designation because we want to be able to speak this language and have these conversations with our clients. Honestly, I'll go back to the EOS. That's the reason we also did EOS. We want to have a framework within GW so that it's not dependent on Sam's sheer force of will running the company to continue to operate. But that 5 years from now, 10 years from now, we could bring in another EOS integrator for a refresh or to help train the next generation who did not go through the original EOS with us. We chose EOS rather than something more specific to accounting because we want to be able to bring EOS to our clients as well so that we can have conversations with them. Have you identified this as an issue? Are you talking about it in your level 10 meetings? Is this one of your quarterly rocks or are you getting distracted? How does this fit into that 3-year picture of those 10-year goals? That's why we chose EOS, and that's why we're going towards CEPA designation as well, because we want to have that common language that we start to talk about with our clients so that it sinks in and they start to grow and build businesses of value. A couple other changes that we've done this quarter. With this episode, you're going to see down in the show notes below, I have developed a Ownership Readiness Scorecard. That's the tentative working title as of the recording of this episode. Not sure I'm in love with it. It's better than the previous one I had, the Successive Readiness Score, or something like that. Successive. Nobody says words like that, but it's an Ownership Readiness Scorecard. This is a 24-question scorecard evaluation that is designed to be taken in 4 to 5 minutes. As I'm looking at myself and judging, am I ready to take over this business? I developed the scorecard so that our listeners of the Art of Succession who are concerned, am I the person to take over this business? How close am I going to be? How do I start to have conversations with the owner of the company and know that I'm moving in the right direction to be more confident in the taking over of this company? We built this scorecard for that target listener. Again, that target listener is me. These are the questions that I lose sleep over. Am I the right person for this position? Do I know the values of this company? Do I know how the company operates on a financial, cash flow with debt? All these different questions are built into this scorecard. I have built that. That is now available to take for free. By following the link down in the description, we are launching that live with this episode. And I'm really excited about that. That's something that I'm going to be talking about with future videos and going to also be linking to in each of our podcast episodes. The flip side of that, this has been a long-term project of mine, 6 months or so. I've been planning on doing this. I'm looking forward to launching it in the new year. We are going to do a flip side of that, which is going to be like a succession readiness survey. And what I really want to do here is I want to build a long-term annual study of our clients, of our listeners, of anybody who comes across GW through the website, through the blog, through YouTube, and is asking, am I ready to walk away from this business? Am I ready to retire yet? This is going to be the succession readiness survey. And really, this is going to be something where you get a score, and then we release the final report in the spring. And then you're able to compare your score against the average score of everybody that took the survey. And then we're going to continue to benchmark that each year. I'm really excited about that aspect of it. Like, I want business owners to say, when I started working with GW, we would use this for new clients coming in. When I started working with GW, my succession readiness score was a 38. After 3 years working with GW, my succession readiness score was already a 52. Another 2 years working with them, it was at a 72. And I'm ready to step out of the company. You're never going to be at 100. And that's what I really want, as I'm talking to the ownership readiness score that you'll see down in the description for this one. I'm not at 100% on this. And when I started my company 13 years ago, I absolutely probably didn't even score like in the top 40, or I didn't even probably score in the bottom 40. I don't want you to take this survey and be like, oh my God, I know nothing. I am not going to be a good business owner. There is an aspect of being a business owner, taking over a company, that is irrational. That is, we always used to say it's like jumping off of a cliff and building your parachute on the way down, starting a business. There is something about it that just takes grit and saying, I'm going to get through this, and I am going to bare my teeth and get us through this hard session, that you will never get from passing a survey and getting 100% on it. If you want to run that company and you're at a point where you're only scoring like 28 on that score, don't think that disqualifies you. Just go into it knowing what some of your weaknesses are, knowing where some of the areas where you need to shore up those weaknesses. I will never be 100% on execution. I will never be 100% on accountability, one of our core values, but I am 150% on foresight. I am, I know what my strengths are and I know what my weaknesses are. And I think those are actually some of the questions at the end of the exam, if I haven't combined those into one question yet. But knowing what your strengths are, work with other people who can shore up those weaknesses. Don't feel like you have to be 100% across the board in order to be a successful business owner, because there are successful business owners who never get above a 30 or 40%. They've just built a great team around themselves. And there are failures in business who would score a 90 or 100%. So it's not supposed to be a disqualifying thing. It's not supposed to be a disheartening thing. It is supposed to be a self-evaluation, a self-assessment to say, I really want to take over this business within 2 years, but I am clueless on this part of running a business. And so these are the conversations that I need to have with my boss in order to feel like, yes, I can take over this business. How do you actually run this business rather than the sales or the technical aspect that I've been doing up to this point? How do you deal with conflict within the company? How do you deal with the unknown? How do you operate a business based off of the financials? Having those conversations with the business owner. And I think that the business owner, if they are somebody that you are trying to convince to sell the business to you, they're really going to appreciate the initiative of you bringing something like this exam to them and saying, look, I really want to start to focus on this. If we could start to have these kind of conversations on a monthly basis, I think within 8 months, 16 months, 3 years from now, I'm going to be ready to buy this company from you. Because that's what business owners say there are not enough of. I had a conversation with a client the other day, and they were talking about how it was their uncle actually was saying, I've built this business and it is successful and I could franchise this easily and other people could step in and operate this and be very successful. but I have all employees and not one of them thinks that they could do it. Not one of them sees themselves as entrepreneurial. Not one of them sees themselves as somebody who could step into the role of being a business owner. And so I want to build this assessment so that you say, I kind of want to, but I'm not sure if I'm ready. Take this simple assessment and find out where you still need to work, some areas where you still need development, and see if it spurs you on, see if it ignites something in you, knowing where you're at with this assessment. But don't take it as completely debilitating or as like a failure. If you got a 60 on this assessment, you're actually doing really good, even though that's technically an F, just from the old days with school. So you could find that assessment down below. That's something that we've been developing this quarter. Really excited to bring that to the market. All right, I'm bringing this thing in for a landing. It's been a long episode already. Hopefully this has been beneficial to you just to see how my brain works and the questions that I'm pondering, going over in my head on a regular basis. This is a day in the life of Barrett, visionary in an 80-year-old CPA firm. So I apologize if it's rambly, but that's how my brain works. I get excited about something and that's all I can focus on for a very burst of energy. And you get to benefit from that. So hopefully these quarterly updates are beneficial to you. You gain some insight or you gain some excitement about your own business. I'll bring it in for a landing. I've got another one of these coming out in 3 months. So I'm not really going to talk about upcoming tax season necessarily in this quarterly update. That we'll save that one for December's update. That's an appropriate time to talk about tax season. Some of the big projects that we've got coming up that we're excited about, this is how we also work with our clients outside of doing the taxes, is we've got some accounting system conversions, massive accounting system conversions for, deca $1 million companies. These are not, send it to Intuit and have them convert you from QuickBooks Desktop to QuickBooks Online. These are big deals. These have a lot of moving parts. Payroll's involved, AR's involved. Payment subscriptions are involved. There's all of these moving parts. So we've got 2 of these coming up with some of our bigger clients this fall. Those are awesome opportunities for us to show the value that we bring to our clients. They're also huge responsibilities because we are saying we will review, even if there's external parties at work, like with payroll, even if ADP is involved in this, we are going to be reviewing their work and signing off on it and taking control, taking charge of the result that they produce. So I'm really excited about some of these bigger projects. These are the kind of things that we live for with our clients. These are the kind of things that need to be done every 10 to 15 years within your business to position it for the future. So many companies don't think about these kind of things. But if you are still running your business based off of a pen and paper or an Excel file, or even like QuickBooks Desktop or something like that, your business is behind. Your business is not going to be successful moving into the future. And so you need to continually refresh some of these things. And those are the kind of projects we do enjoy tackling with our client because it allows us to show the value of what we're providing, make things simpler, make things clearer. It's a chance for a refresh. It's a chance for us to say, all right, what are the reports that we actually want to pull from this new system so that you can run your business? So those are some of the things, that we have exciting as far as projects go here before the end of the year. Again, tax season right around the corner. We start prepping for that in October at about the same time the previous tax season ends on October 15th. We take a breather and we start working, preparing admin wise, planning wise. We are moving up some of our clients to have even earlier discussions about year-end planning and renewals because we are trying to get all of that out of tax season where it's very consolidated. It's very crunched. We did an experiment this past tax season where we extended all of our clients. Some of our clients were really receptive to this. Some of them pushed back a lot. And we think that a lot of those clients probably will not renew with us this next tax year, but we're going to continue leaning into that because, again, we want to emphasize that our value is not by preparing this return by March 15th. Our value is in being involved in your business throughout the year. And that means getting started on tax season earlier than January. So we've got some larger clients that we're going to be having conversations, clear expectations on which returns we're preparing for them, what transactions happened this year that we want to plan ahead for moving into tax season so we're not caught off guard. once we actually get in and start doing the work. So that's what we have coming up in fourth quarter. We are still in the process. We're going to be finishing the process of moving our project management system from Thomson Reuters desktop-based Practice CS to Carbon, a cloud-based practice management system. I've been spearheading that conversion project within the business with about 4 or 5 of my team who've been, taking the various components, whatever is under their jurisdiction, making sure that that all comes together. So that's in process right now. We're going to be training the team on that in the month of October, going live with that in November. We've got pricing renewals. We've got engagement letters going out start in November. We have a lot of our business clients that were on monthly retainer. We're going to gross up those retainers, have those uncomfortable conversations. We're trying to move more of our clients away from retainer and hourly billing to a subscription model where we just say, this is what the fee is monthly, and this is what you've agreed to for the year 2026. So we're trying to move more of our clients in that direction. Again, for me as the visionary, it's what is the right mix for a subscription, making sure that we're not tying it to that product that will go away, so that we are clear. It's about transformation. It's about, we are going to be with you in your corner as a business owner, whether it's 1 tax return or whether it's 3 tax returns or, more than that, whatever the case might be. The value is that we are going to be there in your corner. We are going to be on your side. We are going to get through this with you. So having those conversations at renewals, that's always a fun period at the end of the year, because we think we provide a value to our clients and they have a value in their minds of what we provide. And can sometimes be a mismatch there. We often focus on the negative mismatch there, where I say what we're providing to you is worth $25,000 and they're like, nope, not even close. It was worth, $8,000. That's a mismatch. There's a mismatch in the other direction too. And this is the one that you have to test by continuing to reprice your services and continuing to find out what your clients actually value. I have this conversation with my team. I have this conversation with other new business owners. You as the business owner cannot say what your services are worth to that client. What you can do is you can present them with a price and say, is this where my services fall? They aren't going to know how much they value you until they see that price and until they say yes or no. We can't, and CPAs are terrible about this. They will say, oh, the client's never going to pay for that. We don't even put that option in their minds. We don't even present that to them because we are so conflict averse that we're like, I can't bring myself to put that price in front of them. There are clients who will pay more than that price, but because you never presented it to them, you're never going to find out that they value you. You're going to continue to bill $200 for a tax return when that client would have paid $800 had you just said the price is $800. That's a very small example of that value, but I see CPAs that are out there that are charging $200 still for tax returns. And I'm like, I did not go to business school. I did not get certified to charge less than H&R Block, to charge less than somebody who took a weekend tax certification course and is preparing their first ever tax return and charging $600 for it. Again, I could get into a rant on that. Maybe I will in a future video. I'm sure I will in a future video. As we continue to be squeezed by technology and by higher volume, lower value services that continue to chip away at our not target market, we have to continue to say, I'm not going to go after that business. That business can exist for the H&R Blocks of the world because that's what those clients value. I'm not going to lower my expectation, my price to try and compete with that. They want a $400 tax return, they can go and they can find a $400 tax return. I'm going to prepare tax returns for $40,000. And I'm only going to work with the clients that see the value in us preparing a $40,000 tax return. Is that the majority of tax preparers? Hell no. That's like a fraction of a percentage of the businesses that are out there that would say $40,000 is a fair and reasonable price for what you're providing for me. Again, ranting, pricing, this conversation needs to end. This episode has already gone too long. This has been the third quarter update. I want to thank you guys for listening. We will be back to interviews on the next episode in October. I've really got some awesome interviews here, and I'm also already booking up interviews for the springtime season. I really appreciate you being along for the ride with the Art of Succession. Hopefully these quarterly updates provide just a little bit of a break in the interviews, and also you find value in just seeing behind the scenes of how our firm is working through succession, is working as a multi-generational business. If these are valuable to you, leave comments, leave me feedback. There's a feedback form in the description below. Obviously, you can see our ownership readiness scorecard down there as well. If these are beneficial to you, let me know. I will continue to do them if they're beneficial. If you're just like, nope, I want to go back to an interview, I'm going to see that in the retention rate on the YouTube video. So you don't need to say anything. But I really do obviously clearly enjoy the conversation, the opportunity to talk shop and let you behind the scenes of our company. And so again, if this is beneficial for you, let me know. I want to thank you for listening to The Art of Succession. If you're interested in being a guest on our show, of course, you can find the interview form down in the description below. We'll be back again in October with regular interviews with business owners with their own succession stories. If this has been valuable for you, if it has been something that you have enjoyed, please share it with somebody else. It really helps the show out. It really helps to grow the show and encourages us that we are on the right track with the Art of Succession, bringing it to you on a regular basis. I want to thank you for watching, and I will see you on the next one.